Welcome back. The UAE's financial markets are closed today. Trading will resume on Sunday. So let's now take a look at the various currencies exchanged into dirhams, followed by the price of oil and a selection of commodities. Looking at business abroad, Wall Street slipped on Friday as there was a continued spike in commodity prices, largely oil prices, prompting some investors to rethink their economic expectations. Crude oil futures in New York closed $113 a barrel, posting the third weekly rally in a row. That spike in oil is leading Mark Zandi of Moody's Analytics to downgrade his economic outlook.
I had anticipated oil at close to $90 per barrel. Of course, today it's now over $110 per barrel. And that increase is a very significant tax increase. It acts like a very significant tax increase. It sucks the wind out of the economy. It basically took away the payroll tax holiday that I was counting on to juice up spending and growth in Q1, Q2.
Economic angst also sent investors to gold, which hit a record high for the fourth day running, jumping above $1,476 an ounce. As for the week, blue chips were little changed, while the Nasdaq edged lower. US President Barack Obama and congressional leaders reached a last-minute budget deal on Friday, averting a government shutdown that would have disrupted hundreds of thousands of federal workers. With a midnight deadline looming for a government closure, the hard-fought compromise between Obama's Democrats and opposition Republicans required lawmakers to approve a stopgap funding to keep federal agencies running into next week until the budget agreement can be formally enacted. And after days of tense negotiations and brinkmanship, Republican lawmakers said agreement was reached on $37.8 billion in spending cuts in a budget for the rest of the fiscal year, which ends September 30th. In Europe, finance ministers from the 17-nation single-currency euro area met on Friday to discuss the sovereign debt crisis that has haunted the bloc for over a year, with Portugal the main focus of their talks. Portugal bowed to pressure from financial markets and its European partners this week and became the third Eurozone country after Greece and Ireland to request financial help from the European Union and the International Monetary Fund. European Economic and Monetary Affairs Commissioner Olli Rehn told a news conference after the first day of talks bailout funds would come from the EU and the International Monetary Fund.
It will follow the same logic as the previous packages, and even though we have not yet finally confirmed this, but I will assume that we will have roughly two-thirds of European Union funding and one-third of IMF contribution.
The country has posted meagre growth with an average annual expansion of GDP of less than 1% over the past decade, according to data from the IMF and the World Bank. Looking over to Asia, Singapore Exchange Limited terminated its bid for nearly $8 billion for Australia's ASX Limited after the Australian government on Friday formally rejected the offer, saying changes to the country's financial systems were needed before foreigners could buy the exchange. It was the first time the Australian government had rejected a major foreign takeover on national interest grounds since 2001, when Royal Dutch Shell's bid for Woodside Petroleum was blocked. Australian Treasurer Wayne Swan said the deal would have diminished Australia's economic and regulatory sovereignty, as well as failing to boost access to capital for Australian businesses.
Now, after long and careful consideration and consultation, I have today made orders under the Foreign Acquisitions and Takeovers Act to prohibit the proposal by Singapore Exchange to acquire ASX Limited on national interest grounds.
However, he said Australia was not closed to other offers, provided reforms to clearing and settlement systems were carried out. After the break, we take a look at the day's sports news, so stay with us.